Hi everyone. Thank you for joining me today. In this presentation, we will explore some fundamental accounting concept to help you understand the financial health of our small business. We will be developing into the core principles that govern how we record the track our financial activities, and by the end, you will gain a foundation knowledge of the accounting equation, debit, credit, trial balance, and how they will all come together to create a balance sheet, a vital snapshot of the company's financial well-being. Having a basic grasp of this concept will empower you to better interpret the financial information used to make informed business decisions. So let's dive in it. Now, the accounting equation, a balancing act. So first of all, imaging our business as a great giant balancing scale. On one side, we have like everything the business owns, it assets. This can include tangible things we can see and touch, like cash in the bank, equipment we use, or inventory on the shelves. It can also include intangible assets like brand value or intellectual property. On the other hand, side of the scale, we have the sources of financing for these assets. This is where the concept of liabilities and the equity comes in. Liabilities represents what the business owns to outsiders, such as money owed to suppliers for materials we purchase on credit. Equity, on the other hand, represents the business own money invested by the owner and any retained earnings, which are profits, the business has kept over time. So the key principles there is that the total value of the business assets, what it owns, must be always equal to the total amount of the liabilities, what it owes, and the equity, its own money. So this fundamental equation ensures that everything balances out financially. Now, the double entry accounting, every transaction has two sides. Okay, so let's talk about we record these financial activities. This is where double entry accounting comes into play. It's a system that ensure every business transaction has two sides. Just like our balancing scale, think of each transaction as having an impact on two different accounts. For an example, if we purchase office suppliers for $100 with cash, we are increasing the value of our suppliers, but simultaneously decreasing the amount of cash we have on hand. So here, where debits and credits are basically comes in. So debits, basically this represents increases in assets and expense accounts, and decrease in liability and equity account. So in our example, buying suppliers would be debit because it increases our supplies. In terms of credit, this represent increases in liability and equity accounts, and decrease in assets and expense accounts. When we pay, for the suppliers with cash, that's credit because our cash and asset decreases. By recording, every transaction with a corresponding debit and credit in the appropriate accounts, we maintain the balance in the accounting equation. This ensured the accountancy and completeness of our financial records. Now, try and balance your accounting checkpoint. So after diligently recording all of the business transactions, we need to wait to check, for errors, and ensure all the records are accurate. This is where trial balance comes in. It's essentially a list of all accounts in our accounting system, showing their debts or credit balances at the specific date. Think of it as a checkpoint to verify, that everything adds up. If the total debits for all accounts equal to the total credits, it suggests high likelihood that our records are error free. However, it's important to remember that the balance does not guarantee complete accuracy. It simply means the math adds up to a surface level. We we may still have errors in our records, like accidentally entering an incorrect amount or assigning a transaction to the wrong account. Therefore it's crucial to perform, like additional checks and reconciliation to ensure the data validity. So however, a balance trial, like is a strong indicator that's we are on right track with our financial record keeping. Let's, like solidify our understanding with practical example. Imaging, like we have a local coffee shop called Coffee Corner, a table. This site shows a snapshot of their accounts and their corresponding balances after a month of operation. Here we can see various accounts such as cash, inventory, equipment, and even owners' initial investment. We also have accounts for revenue generated, form, like sales and expenses incurred like rent. Now, the key thing to remember is that the total debits across all the accounts, in this case 17,000, it should ideally equal the total to the credit like 18,000. As you see, there is a slightly discrepancy here. This difference, like could be due to rounding errors during calculation or potential mistake in recording a transaction. While a small difference is not a major cause for alarm, it does warrant further investigation to identify and rectify the errors. However, like um noticing a close match between debits and credits, like in this example, it is positive sign that Coffee Corner's accounting records are likely on the right track. Now, from trial balance to balance sheet. So this balance trial balance we just discussed plays a crucial role in the creating another important financial statement, the balance sheet. Think of a balance sheet as a, like photograph capturing in the financial health of the business at a specific point of time. It provides a clear picture of what the company owns, what it owes, and the amount of own money invested. So here the trial balance helps to construct the balance sheet. So first of all, the extracting account balance. We use ending balances, debit or credit, from each account in the trial balance. Now, number two is categorizing account. It categorize basically these balances into three main sections: asset, liabilities, and equity. Assets go on one side and liability and equities are combined on the other side. Now, ensuring balances, remember the accounting equation. The total value of assets in the balance sheet must always equal the sum of liabilities and equity. These ensure the financial picture we present in accurate and reflects the company true financial standing. Now let's put where what we learn into practice by building a balance sheet for our Coffee Corner example. As you see on slide, the balance sheet showed Coffee Corner assets, cash, inventory, and equipment totaling 17,000. On the other side, we have their liabilities, account payable, which money owed by the suppliers at 1,000. We also have the owner's initial investment capital, which is 12,000. And important to note that the retained earnings section is a placeholder for now. So retained earning represents the profits the business has kept over time, and calculating it requires additional steps in the accounting process. However, with the information we have from the trial balance, we can see that Coffee Corners assets are financed by a combination of debt, which is account payable, and the owner's investment, and the owner's, and the owner's investment. So that provides a snapshot of the Coffee Corner's financial position at a specific date. It shows that their assets funded through a combination of what they owe and their own money, so which is basically equity. So while this is a simplified example, it demonstrates how trial balance helps us, like create a clear, concise picture of the company's financial health. Finally, like the world of accounting may seem complex at first glance, but understanding these core concepts equips you with a valuable foundation to navigate the financial health of our small business by grasping the accounting equation, debit and credit, trial balance, and how they connect to the balance sheet. You will be better positions to interpret the financial information we use to make informed business decisions. Remember, the basic understanding of accounting can be significant asset in any business environment. So it allows you to ask insightful questions, contribute to discussion about financial strategies, and ultimately play a more active role in the success of our company. So if you have any further questions about these concepts or anything specific related to the Coffee Corner financial record, please don't hesitate to ask. Thank you, everyone. Thanks for listening. Have a good one. Thank you.